Hello there everyone, today's video is all about the UK's favourite tax. Yes, it's VAT. Now, specifically VAT and property conversions. Now, VAT is complicated at the best of times, but when it comes to VAT and property, it's even more complicated. Now, if you are a builder, a developer, a contractor, a subby, you need to know about the 5% VAT rule that is out there. So when does the 5% VAT rule apply? So default position in the UK, I think everyone knows the standard rate of VAT is 20%, but then you can have deviations from that being 0% VAT, exempt VAT, outside the scope VAT, and reduced rate VAT, what we call reduced rate VAT. And there's only one rate of reduced rate, and it's 5%. So when does it apply in the building game? Well, we're going to have a look at that today. So there are three circumstances when 5% VAT applies in the building world. Number one is on conversions. Number two is on when there's a change in the number of units. And thirdly, when a property has been empty for 2 years. So they're the three occasions when 5% VAT is in play. So let's take a deeper dive into each of these. So the first one on conversions. So this is converting non-residential to residential. So the most obvious one is something like a barn conversion. So the first strand of number one, a dwelling. When you are converting a barn into a resi, into a house, that is 5%. So the builder charges the developer 5% VAT, obviously assuming they're VAT registered, materials and labour supplied on one invoice to the developer, the owner of the property, 5% VAT. Now, all the subbies that are working in the chain as well will also charge 5% to the whoever's above them in the chain, because the 5% is not just for the one person. For the, let's say there's a contractor working for the development, all the subbies who send their invoice to the contractor, they will also charge 5%. So what has to happen if you are the builder? You will need proof from the developer that the 5% rate of VAT applies. Now, you can say, well, the proof is that you're working on it as a builder. You can see that it's a conversion. So you'd hope that you'd know that the conversions apply for 5%. But a lot of builders may not know that, and they may get confused with the VAT rules, and they may think 20% applies. So then the builder would go to their accountant and get them to confirm that. Or often what happens is they'd get the accountant of the developer to write to them what's known as a comfort letter to say, this is qualifying conversions, please add on 5% VAT to my client, the developer, and that's what they would do. So the builder needs to satisfy themselves that it is a reduced VAT situation. So that's the first one, on dwellings. Now the second type of property within the banner of the conversion world is what we call relevant residential property. Relevant residential purpose. Now what is that? A relevant residential purpose is things like student accommodation, nursing homes, that sort of thing, where it's not just a house. It's typically there's a lot of people living there, like students and the elderly. Hence, it's got this special term, relevant residential purpose. Also, relevant charitable purpose. So these two types that are more than just a dwelling. If you are converting, again, you're converting non-resi to resi, but the resi that you are ending up with is more than just a dwelling, and it's relevant residential, i.e. a care home, or relevant charitable use, again the 5% applies, but this time This time, the actual developer needs to issue a certificate to the builder, an actual certificate that says 5% VAT applies. So the builder is given a certificate by the developer. Now, a lot of people assume carte blanche that if you are a builder and you're doing any of this conversion, you have to get a certificate from the developer. It's not true. If it's just a dwelling, you don't need a certificate from the developer. You just obviously need to satisfy yourself that the 5% is correct, but you don't need a certificate. If it's relevant residential or relevant charitable, then yes, developer needs to give the builder a certificate of reduced rating. Okay, so that's the first instance where 5% VAT applies on a conversion. The second instance that it applies is where there's a change in the number of dwellings. So the second point, change in the number of residential units. Now, this was brought in, the policy behind this with the government. It was interesting as to why we end up with the law that we have. So the government was trying to promote the increase of the housing stock in the UK, has been for years, and they said, look, to encourage people to basically build more units by converting old barns or whatever it is, or old residential units to basically get rammed more into the existing space, for want of a better phrase, will make it only 5% on the VAT. So it was a government policy to have that lower rate of VAT to encourage builders and developers to cram more in. Okay? So that's where it stems from. That's why we've got it on this second strand, changing the number of units. Now, the issue is, though, the point is, it doesn't have to be a change upwards. It could be any change in the number. So let me just demonstrate by way of an example. Apartment block. You've got an apartment block. It's on 3 floors. The ground floor, 3 units. The first floor, 2 units. And the second floor, you've got a nice penthouse, just 1 unit on the top. And it's been around for a while. Developer buys it, says, right, you know what I'm going to do? I'm going to put on another unit on the ground floor. Actually, for whatever reason, I'm going to keep 2 units on the second floor. Still going to, develop them and make them a bit better. But I'm still going to have 2 units on the second floor. But on the top floor, I'm going to cram 5 units into what was the penthouse. So this is an example where reduced rate of VAT kicks in. But the problem here is you have to look at this on a floor by floor basis. So what's happened is that the change in the number of units on a floor by floor basis, we've gone from 3 to 4, 2 to 2, and 1 to 5. So you can see there's been no change on the number of units in the middle floor. So the poor builder who struggles with his VAT calculations and his VAT paperwork at the best of times has actually got to provide a VAT invoice for his services to the developer that says work done on the ground floor plus 5% VAT, work done on the first floor plus 20% VAT, and work done on the top floor 5% VAT. You see how confusing it is? Because there's been no change in the number of dwellings on that middle floor. You can't just look at it in the whole and say, count the number here, count the number there. Yes, it's gone up. The whole thing at 5%, no. When it comes to apartment blocks, the rules say it's got to be on a floor by floor basis. So this is again why VAT is pretty complicated. So poor builder's got to do an invoice, or probably 3 invoices per floor, because he's got different rates of VAT to contend with, and just on where he's working. He's working on the next floor above, but all of a sudden the VAT that he charges goes to 20%. It's confusing, but this is the rules. So 5% applies when there's a change in the number of units. And even though I said the policy was to encourage builders to get more in, go from go from a situation like this to this, where the number has increased overall, but actually it works the other way. So if you've got two semis back to back, obviously semi-detached next to each other, and you develop that and convert it to one house, again there is a change in the number of dwellings because you're going from 2 to 1. So even though it hasn't increased, you haven't gone from 2 to 3, you've gone from 2 to 1, that still qualifies for 5% reduced rating for VAT because there's been a change in the number. When the policy was enacted, the reason for the change was to encourage people to increase the number, but the law was written that it was any change in the number. So it works the other way as well. So that's the second area in the VAT world, in the building world, where the 5% rate of VAT applies. So the third out of the 3 areas is if a property has been empty for 2 years. So if a residential property has been empty for 2 years, work done on that can be reduced rated for VAT. So the builder charges the developer 5% VAT, not 20%, if the property has been empty for 2 years. We're looking at residential here. Now, the problem with this, because there's always problems in the VAT and property world when they're combined. The problem is it's down to the builder to prove that the property has been empty. So unlike, say, down here, right at the start, on the dwelling on the conversion, where you can get a comfort letter if you're the builder, get a comfort letter from your accountant or your client's accountant, the developer's accountant, to say, yes, Mr. Builder, please charge 5%, and that should do the trick. With this, it's a lot more onerous. It's got to be third-party evidence. The builder needs to satisfy himself that the building has been empty for 2 years, and he can't just rely on a letter from his client or from his own accountant or whoever. He's got to get contemporaneous records, got to get council, got to go to the council, get records from council tax information, land registry, all sorts of stuff, housing office records, to prove that that building has been empty for 2 years. And then once he's satisfied, this is the builder, that it has been empty, he can then charge the reduced rate, the 5% on his invoices to the developer. So, yeah, letter from his developer is not enough. It needs to be third-party evidence that that unit has been empty for at least 2 years, and then the builder can charge 5%. So, they're the 3 areas where 5% would apply in the building world. Now, last point I want to make is on professional fees. Now, professional fees are always 20%, never 5%. So, fees from architects, project managers who are not builders, architects, project managers, accountants, lawyers, working obviously on this advising the developer. So the developer's accountant, his architect, his lawyer, his project manager, they will have to charge him 20% VAT. However, what sometimes happens is that the developer would say to the main contractor, you engage with these people, not me. And then you've got what's called a supply and build. You've got a design and build contract. Design and build contract is where basically the architects and the lawyers would contract with the main contractor rather than the developer. Yes, they would still charge 20% because they have to charge 20%, but it's to the contractor who can claim it back. But the point is that ultimately that is passed on to the owner of the building, the developer, but at 5%. So the contractor lumps it in with their invoice. So this design and build contract is for the building, the labour, the materials, and all the services of the professionals, because in effect the professionals have engaged not with the developer but with the builder. And that's how the developer can again have cash flow benefits and not have an invoice with 20%. So everything they get will be at 5%. So that's just, like I said, an overview there on when the 5% rate of VAT applies to the building world. But it is complicated. And the added complication, of course, is now that the CIS reverse charge rules are in play in terms of who actually, from a cash flow, who actually suffers this 5% VAT. But I've done a separate video on CIS and reverse charge. But essentially, this is the situations, only 3 situations where 5% will apply on invoices from builders to developers. Conversion, change in the number of dwellings, number of units, and empty property for 2 years. So hopefully if you're in the building world, either as a developer or contractor or subby, you found that useful. I hope you did. And if you like this video, please do subscribe, and I'll see you soon.